I read your notes last night. China's soft landing off the table. It's either a hard landing or it's a crash.
As a cheerful thought for Thursday morning, sorry. I'm afraid this is a bursting of a very substantial bubble, which goes back, if not years, even longer, and that is a overinvestment bubble. Whether it's in real estate, whether it's in manufacturing, we've got some very serious problems. And the point about a hard landing is you can't control it. Soft landing, you've got levers, you can adjust interest rates or various other factors and hope you can glide an economy or a stock market. With a hard landing, you've lost control. 2008 in the US is an example of a hard landing.
They're pulling the levers pretty hard at the moment. They're trying to make things happen. One of the other guests described the efforts to control the currency as clumsy. Are we into the sort of clumsy territory now? I'm
afraid you're right. That, to me, was the worst of all worlds. What they've done by releasing the link between the dollar is to effectively undermine the stability of the renminbi market. So all the debts that were people that wanted to borrow in renminbis, international investors are now going to be, and Chinese investors as well, going to be obviously a lot more cautious. But at the same time, the devaluation was very small. The Chinese desperately need to become more competitive against their Asian counterparts who've had substantial currency devaluations, whether that's South Korea or Japan. That's the problem.
Do we understand fully yet the ramifications of this? You've seen some big currency moves over the last few days, and I'm still hearing people talking about the fact that the Chinese currency is overvalued, so there's potentially still further to go.
Well, they've got a lot of foreign exchange reserves, and they are obviously, by the fact that the devaluation was relatively slight, unsure as to what to do. If they gave a fully free float, then I believe the currency would have devalued possibly by 10% immediately, and we'd be sinking pretty fast. So we're in a managed decline. I think as the pressures within the domestic economy increase over the next few months, then that managed decline will accelerate. But as you said, it's not absolutely clear how the path will be.
So how do I invest into that? In Abenomics, this is obviously a major blow to Abenomics. How do the Japanese respond to this? How far through the kind of reaction function are we with the emerging markets? Tell me what the investment case is surrounding this.
I think this is a major headache for all markets. This is another wave of deflation, which is spreading out rapidly across the globe. This is the sort of Soc Gen view that we're moving to a sort of deflationary ice age, and I'm afraid I subscribe to that view. They've been talking about it for sort of decades, but I think it's actually happening now.
This is secular stagnation playing out.
This is secular deflation, and the point about deflation is it makes it much more difficult to sustain things like high coupon payments or dividends, because the value of your sales is going down. So I think this is actually pretty concerning for all Western markets as well as emerging markets. I don't think it is priced in. No, we've been stuck in a sort of what I call a microwave economy in the US, which is that it's been artificially heated up by the Fed, but it's too hot and doesn't taste very good. Sorry, it's a rather silly analogy, but I think it does.
Are we going to go ping in September? Does that sound come through in September or December and the Fed starts hiking rates, and what does that do?
Well, I think the Fed isn't going to hike rates. The
Fed's not going to hike rates.
No, the Fed's in the last minutes, and let's face it, they were 3 weeks away, and we've had a little bit of drama since then. The Fed mentioned a couple of key issues as the reason why it's put in the word some delay or something. And those were China, the strong dollar, and actually they also talked about inflation, which surprised me. If you go back to late last year when the oil price first collapsed, the Fed were, as were other central banks, of the view this was a temporary phenomenon, and therefore they were prepared to see through. So even if headline inflation dropped down because we had a big change in the oil market, they felt that it was transitory and they shouldn't read too much into it. That now seems to be changing, and this is common sense. This is not a one-off in commodities. Commodities now look to be set to maintain these very low levels for quite some time, and the Feds are understanding that.